All right, so one of the most important information you are going to learn from this video that is going to be very useful to you is understanding how to read the pressure of the market, such as buy pressure or selling pressure. You need this information very well because as traders, every day as you go into the market, you always have your own daily bias or daily direction, either bullish bias like this or bearish bias like this. And trust me, guys, anytime you choose a particular direction of the market, you are fighting a battle between the opposite side of the market. You are not just the only one participating in that market, though you have a lot of people in line with your direction that day. But trust me, as traders, you always have opposition, which is the opposite side. If you are bullish in the market that day, there are a lot of people that were bearish in the market that day. Now, one thing that will help you as a trader is how to know when there's enough pressure in the market. For example, buying pressure or selling pressure on that particular trading day. You should know when buyers have taken over the market or when sellers have taken over the market. And you don't need indicators to do all this. All you just need is right here in front of you using this candlestick, because this candlestick is the best tool to understand what is actually going on in the market. And in this video, I'm going to teach you guys how to read each of these candlesticks like a pro. And the most important part is the pressure of the market. And apart from that, one thing I want you guys to learn as well is how to apply this whole information on strategic levels in the market, because obviously you're going to take your entries on strategic levels and you're going to need a trading signal or confirmation on all these levels. So let's get started on, first of all, understanding how candlestick work. And after that, I'm going to teach you guys how to know when the pressure of the market is high or when the pressure of the market is low. Let's get started, guys. Now, each of these candlesticks, there's always a story behind them. Each of these candlesticks always tell us what's going on in the market, and we can only be able to read it after the candle has closed. That's why we always advise students to always wait for the closure of the candle so that we can understand what's going on in the market. And basically, I think this is just the only three ways a candle can close in the market. The first one is this. This is what we call strong momentum candle in the market. And then the second one is this one. Of course, everyone should know this is rejection candle in the market. And this one that looks like doji, this looks like indecision candle in the market. Now, this video is not all about teaching you guys candlestick pattern, but what is going on, how to read it, how to know what's going on with this candlestick, and how to apply it on strategic levels in the market. For example, when you see this sign of strength in the market, of course, we should know that one side of the market is dominating the market at that point. For example, if the candle closes with strong momentum like this, we know at this point only the buy side took over the market with great momentum, meaning just only the buyers participated on this interval in the market. This could be any time frame, it could be daily interval, it could be 4-hour time frame, it could be any interval. So only the buyers participated with great momentum. The same thing for the sell side, only the sellers participated with great momentum as well. Now, if you take a look at this three candlestick illustration I have here, if you ask me the one I should prioritize most, some people may think this one is the one I'm going to choose. But however, this is the one I'm going to choose, the one I'm going to prioritize most. If I see this pattern in the market, this is a strong indication for me on that strategic level. Now, whenever you see candlestick like this that has this shape like a hammer, what is actually going on is that one side of the market dominated for some time, and then the opposite came in with strong force and then dominated for that whole interval. For example, let's say this is on 4-hour time frame or 1-hour time frame. Let's just make use of 1-hour time frame. And then the candle obviously opened at this level. Then let's say for the next 30 minutes, the candle was trading to the downside. It was a bearish candle. And then the remaining 30 minutes, the buyers came in with strong momentum, take over everything that sellers has done, and then were able to close to the upside, meaning the buyers came in with so much strength, so much momentum, and then took over everything that the sellers has done in the market. And if I see this kind of reaction in the market, I know that there's a great pressure right here, and most especially buying pressure at this point. So what I need to do is to check how the next candle open, because you don't just jump into the move after the close of the candle. You have to first of all observe very well so that you can get a perfect entry in the market. The same explanation for the bearish candle. So let's assume this was on 1-hour time frame. Buyers was dominating the market for maybe the first 30 minutes or first 35 minutes, and then the last 30 minutes or 25 minutes, sellers came in with great momentum and then dominated the whole interval, which means this 1-hour candle closes bearish. Now, I'm not here to bore you guys with all this explanation, teaching you guys about candlestick pattern, but how do we benefit from it? How do we make money from this information? That is the next thing I want to talk about. First of all, we have to understand you can't go into any trading day without knowing the direction of the market you want to participate in. For example, bullish direction or bearish direction. This is our number one rule, a law in my mentorship program. You must have a fixed daily bias before you can come into the market. All right, because obviously it's not just enough for you to just see a pattern in the market. Oh, this is rejection in the market, bullish rejection. So at this point, the buyers have dominated the market. So let's jump on the buy. And meanwhile, the bias of the market for that day is bearish. So it's not just enough for us to see pattern. It's not just for us to, no. We don't trade that way. If we see something like this high pressure, remember I told you guys, the pressure of the market matters a lot. The information is going to help you. All is just telling us is that, okay, at this point, there's great buying pressure in the market. All I just have to do is to avoid. Don't go in on the market at this point because there's great buying pressure in the market. Remember, the bias of the day is bearish. So we don't just go in and engage because no. We don't flip direction as traders. This is one of the rules. In fact, the major law in our mentorship program that will help you to build sound discipline as a trader because you don't want to waste the money. So the most important thing as traders is that we don't just copy patterns in the market. We don't just see patterns and then start rushing to engage it. We want to work with patterns that is in alignment with the direction of the market we want to trade. So let's assume we are bullish and then we see something like this. This is great sign of rejection that the sellers was in control, and then there's great momentum, meaning there's high pressure in the market. Buyers just came in with high pressure, and then this is a great sign that is in alignment with our direction of the market. But it doesn't just end there. The reason why I say it doesn't just end there is, okay, at what time? All right, this is very, very important. At what time? You don't just come into the market during the, of course, there are different sections of the market, Asia, London, New York, and all these sessions has a respective key zone in the market because we just want to get our entries on the key zone moment in the market, the Asia key zone, the London key zone, the New York key zone, and we as traders, especially ICT traders, we are interested in London key zone and New York key zone. Now, outside of this key zone moment, let's take a look at the key zone moment in the market. Let me go to lower time frame so that you guys can see what I'm talking about. You see, this is London key zone, this is New York key zone. Outside of this key zone, for example, we don't take, if you check a look at this is a typical example of what I'm just talking about. You see this rejection candle right here. This is a sign of bearish pressure in the market. But I can't go in on this move as a seller. In fact, I can't even come close to this signal. The first reason is that it is not on this key zone moment, this London key zone. It is not on this New York key zone. It is outside the key zone. We don't take trade outside the key zone. And the second reason, which is very, very important, is that the daily bias on this asset class is bullish. I am on Nasdaq E-mini futures. The direction is bullish starting from this day, all right? Starting from last week or last week's Wednesday, it has been bullish all this while. Although you may scalp all this retracement to the downside, but it is bullish. So seeing a rejection candle here that look like a signal, of course, it looked like a bearish pressure in the market. That doesn't guarantee that you're going to make money from that trade. And if you take a look, it doesn't even take time. The market just came up and then smashed it because direction is more powerful than any other thing else in the market. I can guarantee you that direction is more powerful. Direction is more powerful than candlestick pattern, more powerful than value gap, order block, liquidity, anything else you want to talk about. Direction is king when it comes to technical analysis. All right, direction is king. Now let's take a look at this. This is the London key zone. Of course, this is so sweet. This is so beautiful. All right, can you see this rejection candle here? This bullish rejection candle. Now, where I even wanted to pay attention to is this one here. This bearish rejection candle here. The rejection started here. The market came all the way to this downside here and then rejected to this point. Now, they opened again at this level, and then traded back in form of bearishness, came back and closed bullish. This is the rejection I'm talking about. This is the pressure I'm talking about. Now, remember I told you guys from my explanation, you don't just go in on the move because a candle has closed. Instead, you wait for the next candle, and which is this one. This is in the there's a video we have created on this YouTube channel that teach you guys how to work with confirmations like this, 3 candlestick pattern. So the moment I see something like this, of course, I can just decide to go in on the move when the market closes here, or wait for price to retest this order block, which is this candle open, came back, retest it, and then I go in on the move. My stop loss, of course, there are some people that say ask question about stop loss, but I don't think at this level you should be asking question about stop loss. Stop loss could be anywhere. It depends on your risk management style. Stop loss could be here, stop loss could be here, however you want to place your stop loss. Now, I don't just want to end this video. Let's take a look at another day example. Let us see if we can see something that looks so amazing for us. You see what I'm talking about? You don't take any trade outside the zone. All right, you see this suggestion, you don't take trade there. because that, and another thing, the direction is bullish. So you don't even have any business here looking for selling opportunity. Okay, so we'll take a look at London key zone as well, because obviously you won't have that particular price action every day. Like market came all the way to the downside, you always see different style of entry. For example, the market was pushing to the upside here. So what I could do is just to wait for maybe a retracement before taking my trade, or perhaps trade during the New York session, and that depends if I see the candlestick pattern. And there are a lot of entry style in the market. I hope you guys are here. I may not necessarily use candlestick pattern here or here. I may use another style of entry, which I've already taught you guys in this YouTube channel. One thing you guys need to see is this thing here. You see this rejection that looks like so amazing for you to start buying, but you see the trade didn't last. It just came back and smashed to the downside. And someone can easily answer that question, because you are trading outside the zone. All right, this is outside the zone. This is not New York key zone. This is not London key zone. So any trade you take outside the zone is 50-50. Let's take a look if we can see more examples, other trading days. Yeah, I love this one here. This rejection candle here. The market came back, traded back into this level gap, and then rejected. All right, so this is a sign of, even though it's a bearish candle, of course, I've told you guys the next thing you need to do is wait for the next candle. You can take a trade at this point, there's nothing wrong with it. So let's take a look at another trading day. And one more thing you guys need to understand is that if you don't see this pattern on daily basis, you can, because what we do, we use it, we add it as confidence. For example, if you work with it with that strategy I taught you guys, wait for London to trade to the downside, and then New York to be a continuation. All you just need to do is use this candlestick, and this is a perfect example. Like today's trade, a perfect example, very perfect. You can see all this rejection to the downside. This one rejected, this one rejected during the key zone session. Or what about this one that looks so perfect? So these candlestick patterns, what they help us to do, they help us to, serve as a signal confirmation in the market. And the most important thing is that it must confirm your original direction of that day. Don't just take trade that is outside your direction, because direction will overpower any other thing else, any other techniques, any other thing in the market. So one of the most important information you have to take note after watching this video is that learn how to apply all these things to your direction of the market. And of course, you can combine more conferences in the market, like this strategy I've taught you guys how to use London and New York key zone together, continue the move through the New York key zone. You can just wait for these rejection candles inside the New York key zone, and then that serve as a signal for you. With all this combined together, you see that your win rate will skyrocket, and then you have more win trade. Your win rate will increase. It will increase your confidence. If you are new to this channel, make sure you subscribe, hit that subscription button right there, turn up your notification button, and don't forget to like this video, guys. I'll see you guys next upload. Peace.